Is your DTI DTF? I don't know. Let's see. Okay. DTI is your debt to income ratio. It's a very common ratio that lenders will use to kind of evaluate your financial situation. You literally just take your monthly debt payments, divide it by your monthly income, and to get a percentage that tells you how much of your monthly income is going towards debt payments. Now, examples of these, oh, it's gone. Anyway, examples of debts that's going to be on there is any mortgages and the taxes and insurance on whatever properties you own. And that's like if you're applying for a home loan, that's going to fall into the prospective debt. They're going to look at how much is this mortgage and what is the taxes and insurance on this property going to be. Then it's vehicle loans, personal loans, student loans, and credit card payments. So anything that comes up on your credit report is going to need to be in there. And it's all measured as whatever your minimum payment is. Now, income. Your income, they're going to look at your income before taxes or deductions, and it's going to be like including your overtime. Now, for vehicle loans, they're just going to look at your most recent pay stubs. But for mortgages, they're probably going to look at, when you go in, you're going to have to bring in 2 years worth of W-2s and your most 2 recent pay stubs. And your income is probably going to be decided based off a combination of W-2s and pay stubs. So hard to say exactly what it would be, but it's going to be some kind of combination of that. But it is before taxes or deductions, and it's including things like overtime. Okay. And then it gives you a percentage of how much that is. So let's say you're spending $2,000 a month on debt payments and your income is $6,000 a month, then that ratio is 0.33, and as a percentage, that's 33% of your income is spent on debt. Now, for mortgages, to get any kind of financing for a mortgage, you're going to have to be under 50%. Have to, basically. For most like conventional mortgages, like Freddie Mac, Fannie Mae, stuff like that, you're going to have to be under 45%. But really, it's the lower the better. And really, like preferably under 40 at least. But the lower the better. Okay? That is how you factor your DTI. Pretty simple. So, good luck.